Greetings in the name of the Most High Yahuwah and His Son Yahusha HaMashiach. My name is Malak Shalomo, aka King Solomon, and I'm going to do a trade recap today on my trade on AMD. Today is the 17th of January 2023. Right now the time is 12:20 a.m. Alright, so starting off with the central floor pivots, let me show you the setup for that. This is the 2-day relationship we're talking about. So this is the top central pivot, this is the bottom central pivot, and this is the pivot for the previous trading session. That was last week Friday. And today we have an overlapping higher value relationship where the bottom central pivot is just below the previous top central pivot. So it's an overlapping higher value relationship, and that's suggesting that it's moderately bullish, right? And we have the open here. You see those yellow lines right there, that's the open. So we're opening above that value, but we're still within yesterday's price range, right? So it's still moderately bullish. Let's see, let me look at the money zone. Alright, so the money zone relationship is a overlapping lower value relationship. Let's see here. Yesterday's value area high was here. Now it moved down to today. It moved down to 70.83. On the previous day, it was approximately 71.66. Alright, so that's an overlapping lower value relationship there on the money zone. So that's suggesting that it's moderately bullish. So you see we have some conflict with the two indicators. They are suggesting slightly different price action. So that's kind of suggesting that it's going to be, for me anyway, it suggests that no one particular direction is really a bias. Let me just let the motorbike pass. Right. So it's suggesting to me that there's no real bias in the price direction. So we might get something like what actually turned out to be like a typical day where you have like a push up in price and it comes back into like a mean reversion trade. You know what I'm saying? It pushes up, or it might pull down and then come back into value. So today we opened just at the value area high at around 70.83, pulled down a little bit, and then we pushed up, right? So at this point here, I went short at let's see, 71.30, and I actually had to stop out on this trade, this first trade here, which was kind of unfortunate, man, because these wicks were kind of demonstrating to me that it's gonna be a short, right? I thought we would kind of move down back into like the POC area here of the money zone, but we didn't get that far. We actually we actually went bullish from here. I had to stop out, and this second trade here, I shouldn't have took this one because it was too bullish, right? So I went short again here and had to stop out on this candle. So let me just show you on my trading platform the exact trades, because these are the paper trade markers I take just in accordance with my indicators, so I could show those on YouTube. So right, so this was the first trade here at, let's see, approximately 71.42. Went short, added to the position here. This is R3, right? This Camarilla R3 right here. This red line. Let me just pull out the arrow. Oh, and I forgot to demonstrate that. But the Camarilla relationship is an inside value relationship, which is suggesting that it might be a breakout level today. So let me just pull this back a little bit and I can show you that. right? So you see the previous days, right? Previous days R3 is here, previous days S3 is here, and then we have the inside value relationship where S3 is now here, R3 is now here, right? So the levels on that was previous days S3 was approximately 61.57, R3 was 72.06, R3 today is now approximately 71.60, and S3 is approximately 70.60. All right, so it's an inside value relationship, and that's suggesting like a breakout, right? It's either breakout or a sideways kind of movement. So if you're thinking about it, right, the money zone is suggesting an overlapping lower value. The pivot, central floor pivots is suggesting an overlapping higher value, and the camera relay is suggesting a inside value. So remember I was saying there's no directional bias with the central floor pivot and the money zone. So when you put that together, oh my bad. When you put that together with the Camarilla being an inside value relationship, and that could suggest like consolidation, you would see that it kind of gives you the idea that it definitely might be like a sideways day or like a typical day with like what happened today, right? So right, so added to the position here because of the wicks on this first trade. So they really got me on this first trade here. So went short again here at R3, the breakdown of R3, because you see we're rejecting price up at these levels. So I'm thinking we're gonna pull back down into like S4, S3, and got stopped out here at, let's see what level that was, at 72, right? So this one here, this second trade, I shouldn't have taken this second trade right here. This was another short at 72.03 and had to stop out here when it pushed up at 72.53. So those were two losing trades on that one. And then let's see, I think I went short here again, and I kind of chickened out on, no actually, yeah, I went short again on one of these trades here. I forgot exactly which one that I broke even on. No, my bad. Right, so I went short here and I made a hotkey error, and it actually stopped me out, man. So I had to jump back in the position, right? So this was the original short here at 72.18, and I made a hotkey mistake, and that closed me out at 72.07. So I just jumped right back in at 72.03 and took a first partial right here at the breakdown of R3 at 71.42, and then I covered all of it at 71.07. So let's see here. Right, so you can see we came back down to the value area high. So that's where I kind of covered the trade, you know. So yeah, man, this second trade kind of messed me up a little bit, but all in all, I actually came back to like a small loss, almost break even, but it was a small loss. So this second trade would have been great if I like didn't take this. I mean, this third trade here would have been great if I didn't take this second one, right? So the second one I had to cover all the losses, so it didn't clear all the losses. Let me see here. Right, so looking at the 15-minute chart where I have the volume point of control, this is another confluence zone where I was looking for, it's like a mean reversion coming back to the volume point of control here. The volume point of control is at approximately, let's see, 70.74. So I was looking at price here if we get any kind of because it was looking really weak. So I was thinking maybe we would even get down to like S4, right? Which is down here at 69.98 or like 70, right? And that motorbike out there is going crazy. So we actually got the support here at the volume point of control around 70, 75. So when I saw the support started to come in, I just covered the trade. So it was like it's a mean reversion trade, you know. You can see the volume is drying up here. So we had the rejection. This is Camarilla R5 right here. So we had the rejection off of R5 and just came back down to the volume points of control. And the Camarilla levels for that was, I think it was somewhere around, let's see, let's take off the volume point of control so I could show that. Right, so we came back to like S2, just above S3. So yeah, that was the trade. My last trade there was a good trade, man. That mean reversion was a good trade, but the second trade I took today, that kind of messed me up. So all in all, I should be a little more patient on the open. If I try once and it doesn't work, wait for like I guess like a better pattern of a reversal, because let's see here. Let's look at this pattern here for the reversal, right? For the second trade. Right, so this one here, this is like it's like a doji candle, I guess. And I was kind of going off of these wick rejections, but the volume came in on this this candle right here. So even though I was thinking it's still weak, the weakness developed later on, you know, when I got the trade here. So I should probably have waited for like more patterns like this instead of going off of this one candle right here after a strong candle, you know. Let me just use the arrow. Right, so this pattern right here, this is a much better entry pattern, right? Because you can see the lower highs being developed. The wick rejections are more prominent here, and then we got the sell-off on this candle. But with this one candle right here after this bullish candle, I should have waited a little more for this to develop, you know. Alright, y'all, and that's my trade recap on AMD. It's your boy Malak Shalomo, aka King Solomon, and y'all trade safe and stay blessed.